The next 3 months could define your financial future. Period. The biggest transfer of wealth in our lifetime is right in front of us, and most people will completely miss it. But those who understand what's really happening with liquidity, with the Treasury, with the Fed, with global markets, and how it all ties directly into XRP, Bitcoin, Ethereum, and every single digital asset are going to be positioned like kings while the rest of the world is still staring at the headlines. This is not about if. This is already in motion. It's happening now. And if you don't understand the forces at play, you're going to get left behind watching history happen instead of profiting from it. This is not financial advice. Here's the truth. The Treasury has been draining liquidity out of the system since July 16th. They've pulled almost $500 billion out through bond issuance just to top up the Treasury general account. That's $500 billion ripped out of the economy in just a few short months. And if you've been wondering why risk assets like crypto, tech stocks, and high-growth plays have been choppy, sloppy, and not breaking out the way they should, that's why. But the key is that withdrawal is stopping. The Treasury's account is now topped up. The liquidity drain is finished. And when that turns, when liquidity flows back in, the entire game changes. This is the single macro variable that explains almost everything. And by the way, right here is where I need to tell you something important. If you want to really get ahead of the curve and see how to actually use all of this to build generational wealth, I put together the XRP Millionaire Blueprint. Inside it, you're going to get documents, infographics, videos, and more that break everything down step by step in a clear, structured way. It's designed so you can see exactly how all of this connects and where the biggest opportunities lie. The link is in the pinned comment below this video. Go check it out because the timing could not be more perfect. Now, let's get deeper. Global liquidity is currently growing at about 8% a year. If you add in average inflation of 3%, that means the true debasement of your cash is running around 11% a year. Think about that. Every single year, your future self is losing 11% of purchasing power if you're just sitting in cash. That's why investors, the ones who actually win, take what looks like irresponsibly long risks in technology, in crypto, in exponential growth assets. Because the game isn't about staying safe in cash. The game is about outrunning the system that is designed to make savers poorer. This is literally what Bitcoin was created for. This is what XRP, Ethereum, and all the big networks represent. They are tools to get ahead of the debasement. And here's what makes it even more powerful. Liquidity isn't just some abstract idea. It explains 90% of Bitcoin's price action. It explains 95 to 96% of the Nasdaq's performance. Let that sink in. 90% of crypto, 96% of tech stocks, all explained by one macro force, liquidity. Everything else just noise, wiggles on a chart, headlines to distract you. If you get this one thing, you don't have to worry about chasing every story. You just need to ride the tide. So, what's happening right now? Since July, global liquidity year dipped slightly, and sure enough, what did the markets do? They ticked down. But that's just the setup, because now with the Treasury General account replenished, the need to keep pulling liquidity out is gone. We're at the turning point, and that means we're entering what Raoul Pal calls the acceleration phase. That's when liquidity isn't just growing, it's compounding faster, 10 to 15% a year, and risk assets explode higher. You've seen this before. In 2013, when liquidity surged, Bitcoin went parabolic. In 2017, with global recovery and easy money, Ethereum and XRP had their legendary runs. In 2021, with stimulus checks and zero rates, the entire crypto market went to new highs. Every single cycle, it's the same story. Liquidity is the gasoline, crypto is the engine, and when those two connect, history is made. Now here's the crazy part. While liquidity has been pulling back slightly, the Nasdaq has still been doing extremely well. Why? Because tech stocks are sucking in massive global capital flows from institutions and foreign investors, riding the AI and technology wave. But Bitcoin has lagged slightly. It's been sloppy, consolidating, correcting. And this is exactly the setup we've seen before. Every breakout Bitcoin versus the Nasdaq always plays this dance. Consolidate, underperform for a moment, then rip higher and leave everything in the dust. That's why even some crypto hedge funds are thinking, maybe we should just play tech stocks. And that's exactly when crypto takes the lead again. Look at the chart from 2022 until now. Bitcoin has consistently outperformed the Nasdaq. That's its job. That's what it does. It runs ahead, and every time it corrects back to this same zone, this 2 standard deviation line, it sets up for the next major outperformance. We're right there again. Which means not only is Bitcoin about to reclaim its dominance, but the altcoins, including XRP, are set up to do even better. Think about it. XRP has been consolidating under massive pressure for years, with one legal cloud after another. Now that cloud is gone, liquidity is turning, institutions are moving in, payment rails are being built globally, and the moment marginal capital flows back into crypto, XRP doesn't just follow Bitcoin, it moves faster. It has the real-world adoption angle plus the network effect. That's why you need to be paying close attention right now. And remember, this is not about the next 3 days or even the next 3 weeks. If you're focused on that, you're already losing. This is about positioning for the next 3 months and beyond, because we're entering the acceleration phase of global liquidity. That means asset prices, stocks, crypto, everything will keep climbing until something comes along to suck that liquidity back out. Until then, the path of least resistance is higher. The S&P 500 right now is moving almost exactly like it did in the 1990s tech boom that ended in 2001. But before it ended, it delivered some of the most explosive gains in history. Today's AI narrative is the mirror of that era's internet narrative. The flows are the same. The investor psychology is the same. And just like then, those who doubted, those who said it's over or this time is different, were the ones left holding cash while everyone else multiplied their wealth. So ask yourself right now, do you want to be the person who sees the setup clearly and takes action, or the person who wakes up in 6 months saying, I knew it, but I didn't do anything? Because one thing is certain, the opportunity is not going to wait for you. Liquidity doesn't care about your hesitation. It just flows, and it rewards those who are in position. And that brings us right back to XRP, because while Bitcoin leads the way, XRP is uniquely positioned to capture outsized gains when capital flows back into altcoins. Its correlations, its consolidation, its structural setup all point to one thing: explosive upside in the acceleration phase. And this is where things get really interesting, because what most investors miss is that the entire market structure, stocks, crypto, bonds, even real estate, is downstream of liquidity. It's not earnings reports, it's not political headlines, it's not even short-term inflation prints. Those are just surface ripples. The real tide is liquidity. Once you see that, it changes the way you look at every chart, every asset, every correction, and every rally. Think about it this way. If 90% of Bitcoin's moves are explained by liquidity, then trying to trade based on short-term narratives is basically like trying to surf without watching the waves. You might get lucky here and there, but the real power comes when you align yourself with the swell. That's what the institutions are doing, and that's why the big money always seems to know before the public. They are tracking flows, not stories. And right now, the flows are telling us something very clear. The Treasury's drain is done. The liquidity catch-up is about to begin. Global M2 growth, the broadest measure of liquidity, is reaccelerating. Historically, when that happens, risk assets surge every single time. And because crypto is the most liquidity sensitive of all, it doesn't just move, it explodes. Look at what's happening in altcoins as a preview. Ethereum has been sitting right at the top of its range, chopping but refusing to break down. Solana tried to break out, got slapped back, but is still hovering at levels that scream accumulation. Even the smaller layer ones like Sui have shown resilience. That's not weakness, that's positioning. It's the market coiling, waiting for the floodgates to open. And the moment those flows return, the rotation begins. Institutions always start with the safest risk on plays. That means NASDAQ, megacap tech, the Apples and Microsofts of the world. That's already been happening, which is why the NASDAQ has outperformed most assets this year, despite the liquidity dip. But once that first wave is established, the next flows move to Bitcoin. And from there, it cascades into altcoins, with XRP historically among the biggest beneficiaries. Now let's zoom out to the macro picture. Global liquidity isn't just about the US Treasury. It's also about central banks worldwide. China has been quietly loosening. Japan is injecting liquidity. Europe is leaning dovish again. The US is already signaling rate cuts ahead. That's synchronized global easing. And synchronized global easing has always marked the beginning of massive bull phases. In 2013, it was Japan's liquidity flood that kicked off Bitcoin's first parabolic surge. In 2017, it was synchronized growth and loose monetary policy that gave Ethereum and XRP their rocket fuel. In 2021, it was coordinated fiscal and monetary stimulus that made crypto the best-performing asset class on the planet. And here we are again, with the same conditions lining up, except this time the scale is bigger, the adoption base is broader, and the capital pools are deeper. This is why Raoul Pal says crypto is the easiest macro trade of all time, because instead of juggling dozens of conflicting indicators, you just need to ask, is global liquidity rising or falling? When it rises, you go long risk. When it falls, you pull back. Everything else is details. Now, let's dig into the Bitcoin versus NASDAQ dynamic, because this is critical for understanding where we are. Since 2022, Bitcoin has consistently outperformed the NASDAQ. Every time it consolidates, it does so in a corrective pattern. An uptrend, a correction, then another leg higher. Right now, we're sitting at that exact corrective setup again, with Bitcoin underperforming slightly in the short term, but positioned for its next surge relative to tech. And here's the kicker. Whenever Bitcoin regains leadership, altcoins follow with even more explosive moves. Why? Because they're higher beta. They have smaller market caps, less liquidity depth, and more narrative-driven momentum. When capital is flowing into the system, those characteristics turn from weaknesses into weapons. That's why in 2017, XRP could rally thousands of % in months. That's why in 2021, altcoins like Solana and Avalanche had life-changing runs. It's the same structure every time. Bitcoin leads, then the capital cascades into alts, and that's where the exponential gains are. If you've noticed the sentiment lately, many traders are already giving up on crypto. They're saying, the market has changed, it's boring. I'll just trade tech stocks. Even hedge funds are pivoting toward equities, and that's exactly the contrarian signal that usually precedes the next crypto breakout. When the crowd gets disinterested, when even professionals start doubting, that's when the asymmetric upside is hiding in plain sight. To back this up, let's look at the DMARC signals Raoul Pal tracks on his Bloomberg setup. The 9139 pattern is flashing. For those who don't follow DMARC, that's essentially a technical exhaustion indicator that often marks turning points. What it's saying is Bitcoin is about to outperform technology again. And if Bitcoin is about to outperform, that means altcoins are lining up for their own surge right after. Now, let's tie this back to the bigger market cycles. The S&P 500 today looks eerily like the S&P during the late 1990s tech boom. The AI narrative today is playing the same role as the internet narrative back then. Both drove massive capital flows into tech. Both created bubbles of optimism, and both sucked in global investment like magnets. And while bubbles always end eventually, the ride up is where fortunes are made. The parallels are striking, and they tell us this cycle probably lasts longer than most expect. The Fed's coming rate cuts are another accelerant. When rates go down, liquidity goes up. When liquidity goes up, assets climb. And the more cuts, the more fuel. Combine that with ongoing money creation globally, and you have the perfect recipe for a liquidity-driven melt-up across risk assets. That's why ignoring liquidity is like ignoring gravity. You can't fight it. You can only align with it. So where does XRP fit specifically? It's at the sweet spot of macro and micro. On the macro side, it's correlated to liquidity flows just like Bitcoin and the Nasdaq. On the micro side, it has catalysts unique to its own adoption story: cross-border payments, institutional partnerships, regulatory clarity. That dual tailwind is rare, and it's why XRP historically has such explosive runs when the stars align. And here's another point. The crypto market has matured massively since 2017 and even since 2021. Back then, institutional infrastructure was minimal. Today, we have ETFs, custody solutions, global regulatory frameworks taking shape, and real adoption from banks and payment providers. That means the scale of capital that can enter this time around dwarfs anything we've seen before. When that capital comes, it won't trickle, it will flood. One more angle to consider: foreign capital flows. Right now, investors outside the US are desperate for yield and growth. With many economies stagnating, US tech and US-driven crypto narratives look like the only game in town. That's why the Nasdaq is attracting so much global money. But once Bitcoin reclaims its leadership, those same flows will rotate into crypto, and XRP will be one of the biggest beneficiaries. Remember, markets are narratives built on liquidity. The liquidity provides the fuel. The narratives provide the spark right now. The liquidity setup is clear. The narrative spark is AI for tech and payments adoption for XRP. When the two combine, you get exponential outcomes. So the roadmap ahead looks like this. Liquidity stops draining. Flows begin to reaccelerate. Nasdaq continues higher on AI momentum. Bitcoin outperforms the Nasdaq as the liquidity tide lifts crypto, and XRP outperforms Bitcoin as altcoins capture the higher beta flows. It's a chain reaction, and it's already in motion. And this is why you can't focus on short-term noise. If you're worrying about the next CPI print or the next Fed headline, you're missing the forest for the trees. The forest is liquidity, and the forest is growing again. Now, let's drill into the psychology of the market, because this is the part that most people underestimate. Liquidity drives the flows. But sentiment dictates how aggressively investors deploy capital into those flows. And what's happening right now is a classic setup where the crowd is cautious, distracted, or skeptical, while the underlying liquidity conditions are turning in favor of risk assets. That's why the upside potential is so asymmetric. When you talk to average investors, you'll hear the same lines. Crypto is boring. Tech is already overextended. Rates are still too high. And yet, if you overlay those opinions with historical liquidity cycles, you see the same pattern again and again. At the exact moments when people start doubting, when they are too busy chasing yesterday's winners or hiding in cash, that's when the setup for exponential upside is hiding in plain sight. In 2015, people were convinced Bitcoin was dead after a brutal bear market. That was the setup for its run from a few hundred to $20,000. In 2019, skepticism dominated again, with investors dismissing crypto as irrelevant. That was the setup for the 2022-21 cycle that took Bitcoin to $69,000 and pushed XRP, Ethereum, and dozens of altcoins to new highs. Today, in 2025, the same psychology is repeating. Boredom, doubt, and distraction. all while liquidity is about to reaccelerate. This is why you cannot let sentiment dictate your strategy. You have to let liquidity dictate your framework. Right now, liquidity says we're entering the acceleration phase. That means risk assets, especially crypto, are set up for major moves. Now let's focus more closely on XRP because its structure in this cycle is unique. Unlike Bitcoin, which is purely a macro liquidity bet, XRP sits at the intersection of liquidity flows and fundamental adoption. On the liquidity side, it moves with the tide like any other risk asset. On the adoption side, it has real utility that continues to expand, particularly in global payments and settlement. That dual positioning means when capital flows return, XRP doesn't just benefit passively. It benefits actively because institutions already have a use case for it. Look at the partnerships Ripple has built worldwide. Banks, payment processors, remittance companies, they are already experimenting or deploying XRP for cross-border settlements. That's not just a narrative. That's infrastructure. And when global liquidity turns, that infrastructure becomes a magnet for capital because it has both growth potential and real-world adoption. Now combine that with the psychology of the market. Many investors still see XRP as the laggard, the coin that's been stuck for years under the weight of legal battles. But that cloud is gone. The SEC case that hung over XRP for so long has been resolved, providing clarity that no other altcoin enjoys at this scale. That's a massive edge. While other projects may face regulatory uncertainty, XRP is stepping into this cycle with a green light, and the market hasn't fully priced that in yet. That's why the setup is so powerful. When you have liquidity turning, adoption building, regulatory clarity, and investor skepticism all at once, that's the formula for asymmetric upside. That's when you get moves that look impossible in hindsight, but are obvious in real time if you're paying attention. And let's not forget the broader context. Every cycle in crypto has produced new leaders, but XRP has consistently been part of the conversation because of its institutional focus. It doesn't need to compete with every new DeFi or gaming project. Its lane is clear: global payments. That focus gives it staying power. And staying power combined with liquidity tailwinds is what creates explosive runs. Now let's expand on what Raoul Pal emphasized: the simplicity of this macro setup. Investors often overcomplicate their strategies. They chase dozens of indicators. They react to every news headline. They get whipsawed by short-term volatility. But when you zoom out, the biggest moves are almost always explained by liquidity. That's why he calls it the easiest macro trade of all time. Because once you align with liquidity, you're aligned with 90–95% of the price action in both crypto and equities. So if liquidity is rising, your job isn't to overthink. Your job is to be positioned. And that's what this moment is about. Positioning before the flows return in full force. Positioning before Bitcoin reclaims leadership. Positioning before altcoins, especially XRP, capture the higher beta gains. The acceleration phase doesn't announce itself with a headline. It reveals itself in price action. Bitcoin grinding higher against skepticism. Ethereum holding its range despite doubt. XRP consolidating while adoption expands. These are the tells, and they're all flashing right now. Think about what happens when global liquidity moves from 8% annualized growth to 10–15%. That's trillions of dollars in capital searching for a home. Some of it goes into bonds, some into equities, but a growing share inevitably flows into crypto because it's the highest beta play in the market. And within crypto, a meaningful portion finds its way to assets like XRP, which offer not just speculative upside, but also real-world use. And here's the key. The market always underestimates how fast these moves happen. In 2017, XRP went from pennies to over $3 in less than a year. In 2021, Solana went from under $2 to over $200 in the span of months. When liquidity and narrative collide, The velocity is unlike anything else. That's why waiting until it's obvious is too late. By the time the mainstream headlines catch on, the majority of the move is already done. Right now, it's not obvious to the crowd. It's only obvious if you're paying attention to liquidity. That's your edge. And this is why the next 3 months matter so much. They are the inflection point where the liquidity drain ends and the acceleration phase begins. Miss that window, and you miss the positioning. Catch it, and you ride the wave. That's the difference between watching wealth transfer from the sidelines and being part of it. It's also important to remember that markets move in phases. We've already had the banana zone phase 1 correction. Sloppy, frustrating, full of false starts. That's behind us. Next is the acceleration phase where liquidity ramps, prices climb, and narratives take hold. After that comes the mania phase where even the skeptics pile in at the top. The smart money positions now before the mania, while the crowd is still bored or doubtful. So the question becomes, where do you want to be positioned on the sidelines with cash being debased at 11% a year, or in assets that benefit directly from that debasement? History shows the answer. Every cycle, those who aligned with liquidity, who positioned early, captured exponential gains. Those who hesitated, who doubted, ended up chasing late. This cycle is no different. Liquidity is the signal. Crypto is the engine. XRP is the opportunity. And the window is open right now. If you've watched this far, you already understand more than 99% of investors. You see the tide turning. You see the setup forming. You see the simplicity that others overcomplicate. The only question left is what you'll do with that knowledge. Because the next 3 months are not just another chapter. They're the moment that sets the stage for the rest of this cycle and possibly the rest of your financial life. And if you want the clearest, most structured way to connect all of these pieces, liquidity, XRP, adoption, cycles, positioning, I built something for you. It's called the XRP Millionaire Blueprint. And inside you'll find documents, infographics, videos, and more that lay everything out step by step so you can see exactly how to act on what's coming. The link is waiting for you right now in the pinned comment below this.